Good evening, everyone. I really hope you all are doing good and your preparation is going great as well. In today's session, we are going to continue our revision of important limits under the Companies Act 2013. In previous session, we covered important limits from section number 149 to section number 203, and you can watch it by clicking on I button above. And coming to today's session, you are, as you can see on your screen, we are going to cover important limits under section number 139 to section number 148, and there are three important limits in here. First being for the rotation of auditor, second being the disqualification part, and third being the limit for cost audit under section number 148. All right, so let's head to it, and I hope you'll be enjoying this session as well. So as you can see on your screen, there are four columns. First being section number, second being particulars, third being requirements, and fourth, the important one, being limits. Let's head to first section number 139, which talks about rotation of auditors. Section number 139 subsection 2, I say, which talks about rotation of auditors. And if it is read with rule number 5, there are given some limits here which says that the applicability of rotation is only for few companies. That is first for listed companies, second for unlisted public companies having paid up share capital of more than or equal to 10 crore rupees, and for private companies having paid up share capital of more than or equal to 50 crore rupees. So in case of listed companies, the applicability of rotation of auditors is very much there, and for unlisted public companies, the paid up share capital needs to be more than or equal to 10 crore rupees. And for private companies, they should have a paid up share capital of at least 50 crore rupees. But if the companies, all the other companies, if they have a borrowings from bank or public deposits or financial institutions of more than or equal to 50 crore rupees, then again the applicability of rotation of auditors is very much there. All right, so if you want to summarize it, so I would say for listed companies, for unlisted public company, if they have a paid up share capital of more than equal to 10 crore rupees, or their borrowings of more than equal to 50 crore rupees. And in case of private company, if their paid up share capital is more than equal to 50 crore rupees, or their borrowings is more than equal to 50 crore rupees. If a company is within these limits, then the entity should adhere to the rotation of auditors provisions, and that says that for individual auditor, one term of 5 years shall be there, and for the firm of auditors, 2 terms of 5 years shall be there, and then there need to be a cooling period of 5 years. All right, so we are not going into the details. We are just here to understand the limits that I've already told you, that it is applicable for listed company, unlisted public company having paid up share capital of more than equal to 10 crore rupees, private company having paid up share capital of more than equal to 50 crore rupees, and all the other companies if the borrowings from the financial institution, banks, and public deposits is more than equal to 50 crore rupees. Remember that it is not applicable for OPC, small companies, and other companies if they are not applicable, and other companies if the limit is not surpassed. All right, now let's head to next section, which is about section number 141 subsection 3 clause G, which talks about disqualification to be an auditor. If a person or partner who is in a whole time employment elsewhere, then that person or partner cannot conduct the audit of companies. Now let's come to the next important part, which says that it should not exceed 20 companies per individual. That means an individual cannot audit more than 20 assignments, cannot take more than 20 audit assignments. All right, and the companies which are included in that limit are first being the public companies, Second being the private limited companies having paid up share capital of more than or equal to 100 crore rupees as of the date of appointment. That means that if there is an OPC, or if there is a small company, or if there is a dormant company, or if there is a private company having paid up share capital of less than 100 crore rupees, then that individual can very much without any limit audit their accounts without any limit. But if a company is a public company or a private company having paid up share capital of more than or equal to 100 crore rupees as on the date of appointment, then the maximum limit of 20 companies is there. All right, I hope I made myself clear. Now let's head to the most important section for your exams, that is section number 148, which talks about cost records, maintenance, and cost audit applicability. All right, now first let's talk about cost record maintenance. It's a short one. It says that if a company is operating under prescribed sector, then if if that company has a total turnover of more than or equal to 35 crore rupees in immediately preceding financial year, then that company shall have to prepare or maintain the cost records for the financial year. All right, now let's head to the cost audit applicability. It basically is divided into two things, first being the regulated sector and second being the non regulated sector. All right, in regulated sector, there comes telecommunication services and electricity generation and petroleum products, drugs and pharmaceuticals, sugar and industrial alcohol. And for non-regulated sectors, the other than that I have mentioned already, comes under non-regulated sectors. All right, but I strongly recommend you to go through the list of these sectors for your better understanding. All right, so now for regulated sectors, overall turnover, if it is more than or equal to 50 crore rupees, then the cost audit applicability is there for that company. But if and only if the products that that company is manufacturing, if their turnover is more than or equal to 25 crore rupees. For example, there is a company whose products are like who has three products and their overall turnover is more than or equal to 50 crore rupees. All right, but the turnover of their products is up to 25 crore rupees or less than 25 crore rupees for that example, then the cost audit applicability will be there company wise, but there will be no cost audit for the products. So the results would be there will be no cost audit, but the cost records maintenance will very much be there since the turnover is more than or equal to INR 35 crore rupees. I hope I made myself clear. Now let's head to the for non-regulated sectors. The overall turnover is more than or equal to 100 crore rupees, and the products with turnover of more than or equal to 35 crore rupees shall be audited amongst the products that non-regulated sector company is producing. All right. Now there are few exceptions in the requirement of cost audit. First being if the revenue from exports in the forex is more than 75% of total revenue, then the cost audit applicability will not be there. Or if the operation is being done in special economic zone, that is for example in Noida, then that company shall not be required to go through the cost audit. And if the company is engaged in the generation of electricity for captive consumption through captive generation plant, then again the audit requirement of the cost audit requirement will not be there. I hope I made myself very much clear for that, and this is the end of the session. I wish you all the best and good luck for your exams. I really hope you score good and you clear your exams with flying colors. And if you need this PDF, you can check out our Telegram channel, and I wish you all the luck. Thank you.